Hi, ladies and gentlemen. Eric Mashinsky. It's actually the 5th of June, Wednesday in the evening. I want to give this update for the morning bell. I might send it out tonight yet. Nothing urgent in it in terms of jumping into something, but more of a quick check-in on the markets, highlighting a few different things that I think are interesting in terms of names. But one thing I wanted to talk about, and this will be in the headline or subject line, I'm checking in on Bitcoin because those of you that have been with me for a long time, you know that this has been something that, especially back in the day in 2016, and again in 19 and 20, when I initially had recommended Bitcoin back under $500 in May of 16. And, you know, big deal though. I mean, I picked up on it pretty fairly early, but even myself at that time, it was play money, so we ended up seeing, obviously, by the end of 17, that price had gone up ridiculously in terms of, a move from 500, let's say, to 20,000. In this newsletter, if any of you were around, you recall, I still remember it pretty vividly, when it hit 2,500 in that initial run in 17, the second half of 17. I took profits publicly. I actually went short GBTC, and by the skin of my teeth, covered that short in the high 1000s, made a little bit of money, but it was more about the fact that when I was watching the tape and the trading on Bitcoin, um, I was like, I could get run over here. This thing is acting very bullish. And one of the things that I think is a big advantage for those of us that are Gen X or older, even some of the later millennials, if you ended up learning about stocks and watching what they call tape reading, where we didn't have all of these bells and whistles, even charts were not as clear. The updated information, the ability now, where it's just like with Google Maps, you can end up relying on it so much that you forget that it's really not that complicated to get to a certain place that you go all the time or is near your house. If you just knew which direction it was, you should be able to find it without relying on Google Maps. But because we do that so much, um, it's normal. And then we lose some of that innate ability, I think, though, for, navigation, let's say. Similar to tell me your phone number. I have no idea what it is because I have you in my contacts, and I'm going to dial your phone based on your name. Back in the day, we had to memorize phone numbers for people, which, 7 digits is not that complicated. But longer than that, it starts to get interesting. In any event, what I'm thinking about right now and talking about tonight that's going to apply to the gold market as well is, and the silver market certainly, is that feeling and watching. So the reason I even caught Bitcoin and started to get in there at 450, I think it was when I bought my first Bitcoin. It was like earlier that May, and then I finally decided, like, this is going higher. I'm going to recommend it to everybody in the gold investment letter. But the reason for that was that because I had heard about Bitcoin a lot earlier. I'm not a techie per se or a developer, so it was too complicated to buy it. And one of the main exchanges, Mt. Gox, back then was the only way to do it. I bought a bunch of domains with Bitcoin in the URL back in 2012, 13, 14, because I'm like, well, this could work. I don't know. I don't know enough about it, but just in case it does, I'll buy some domains. So I was lazy, didn't really look into it. And Mt. Gox, if you bought there, you're still in litigation. They basically lost your Bitcoin, and that's a whole other cluster, which looks like those are being sent back out finally. But in any event, the point is that when Bitcoin went from 2 digits up to 1,200, I believe that this was the 2015 top, maybe, something like that. And then it ended up pulling back from 1,200 all the way down into the low hundreds. And I remember distinctly, I had watched in the airport. I had seen that Bitcoin had recovered off of like a $200 low, and was now at like 350, 400. And I was watching how just how it behaves from that, pro or pre-internet mobile communication information age era, where the best that we could do, as even a professional stockbroker, which I was early on in my 20s, is watching the tape, and you get a feel for when something is bullish or bearish or going higher, about to break out or about to break down. There's that component, and then there's the let's look at the charts and the technicals and the signs and the signals, and that whole part that's separate, obviously, than fundamental analysis. But I was able to get a good grasp of that, and I credit tape reading for some of the ideas that I've recognized, like Bitcoin back at that time, because the tape was telling me that this was going higher. I didn't look at a chart. I didn't, it was nothing. It was just like out of the corner of my eye. I'm watching the recovery happen steadily. I had noted it, I think, a week or two before, that it had gone, off of the lows, but then it was like something had occurred where it was sticking. And that's what got my attention. And I thought to myself, this thing isn't going away. That's what made me look at it even closer. And so that's the history of the Bitcoin going into the 17 bubble. We made some good money. If anybody, took me up on that, but not many people did. I didn't even put serious money in it at that time. And then I ended up trading it again. Once it went over 10,000, I bought some for a trade and this and that. But then what that did is it got my attention to do my homework on blockchain and Bitcoin. And I had resolved that after Bitcoin had cracked below 8,000, um, I was going to start to auto accumulate a position for the long term. I had likened it to sort of the post 2000, into 2001 recession bubble popping of the internet stocks, that was what we were going into in 18 and 19. And I ended up accumulating. There were periods of time within that period that I had come out and in this newsletter had said things like, my conviction became so deep that I said, if you have kids, whether they're 2 years old or they're 12 years old or 14 years old, um, if you think that I've got any acumen in this business whatsoever, I'm obviously not getting paid on you buying Bitcoin, but listen, buy one Bitcoin for your child, for each child that you have. And it's either going into the millions or it's going to zero. So you'll realize this was around 4,500 to 5,500, if I recall, where I really put this analogy forth and I started to talk about it. It might have been in 19, but some people took me up on that. I'd actually love to hear from more of you that did, because I said, just don't touch it. And by the time your kids get to the age of going to college, you'll be able to pay for that education upfront. And I'm not talking about a 2-year community college. I'm talking about a doctorate at Harvard. If what I see happening, half of it happens. And sure enough, we did see Bitcoin go to 65,000 or whatnot in 2021, 2 different times. And really, I started to get really loud, after the COVID crash and even prior to that. And in 2019, I talked more and more about that here. And I just want to give some of you a history and also just backtrack for those of you that have been here, because right now, my message, this is the point: Bitcoin's about to go again. And so many investors, so many gold folks don't own any, don't own enough, feel like you missed it. This is my message to you. Just because I've had good success with the Bitcoin markets in the past and with sharing this information with you guys doesn't mean that will continue, obviously. But go look back at late 22, early 23 email updates from me about Bitcoin when it was in the teens, and 17,000 and 18,000 and 20,000 and 16.7 back in the first part of January of 23. And I think I literally did pound the table. I said emergency cash needs to be deployed in this thing. And, those of us that were acting back then, this is part of the reason why I continue to be able to have cash and liquidity to buy more shares in my favorite mining stocks. And anyway, I'm just mentioning to you that it's getting close for Bitcoin to break into new high territories. And it's over the next 12 months that I see a parabolic move again. Where does that take it? I really don't like these type of price predictions because again, like while you're in it, you get a better feel for how far it's going to go or what's going to happen. But if I have to guess, I don't see I don't see anything less than 200,000 on this peak in this crypto summer fall. Um, there's a 4-year cycle with this stuff. That is evident. And it does have to do to some degree, we don't know how much, with the halving events, which we just saw in April. And then what happens after they take half of the supply out of the market? The new supply, the daily supply gets taken out of the market. It's a deflationary asset, um, which is very unique. Now we've got big money ETFs. All this stuff is approved. Money flows from an institutional level. Uh, Arguably could drive this as high as 450,000 is my top of the range. Call it 2 to 400,000, most likely 250 to 350. That's a lot of upside from 70K. Obviously, it was better if you bought when things were down, but it's our human nature. We tend to shy away from things if we've been burned by it, quote unquote. But I'll tell you something. One of the benefits of staying in the game with me at Gold Investment Letter, if you would have just, no matter what other little juniors or whatever you bought, if some of them have gone to shit or were duds, or you bought it after it ran and then you sit on it forever, or you have the winners, but those never get sold and ride them back down. This all happens. This happens to all of us, and we deal with some very speculative stuff in the junior miners here. But if anybody listened to me at those key times at all on crypto, you'd be up a lot. And I think just today, what I'm mentioning is I see gold um, bottoming out here in terms of getting ready for the next break. I've mentioned it before. When we get a monthly close above 2,100, we're going at least to 2,700 to 3,200 within about 9 months, 12 months, something like that, 15 months on the outside. I'm sticking with that. I forgot the month that we closed above the 2,100. Was it March? So this game, sort of just started. We went right to 2,400, but gold is going higher. And so physical gold buyers, you want to lock in what you need to lock in now. The mining stocks, there are a couple of factors that are going to drive higher mining stock prices through the rest of the year. Two that I'll mention that are obvious, but also worth highlighting, is the gold to oil ratio is in a very good spot, meaning uh, the price of gold that companies are getting by producing it and selling it in the market is high versus and relative to the price of oil, which is the key component of cost for gold miners, silver miners, any miners. And what that is going to, I believe, lead to over the next several quarters are beats on the upside for earnings. I'm talking about the seniors and the producers. They are going to beat on the upside because they've been so wrangled back and conservative about what they're going to do with forecasts and don't want egg on their face, that some of these companies are going to blow out their earnings expectations. Many of them will. Most of them will, unless they have problems with actual operations. They're going to have, even if they get in the lower range of their projections in terms of ounces produced, you're going to see a tremendous amount of beats and upside surprises on earnings, which we know drives share prices and valuations. So we're coming into a period of, I think, robust earnings for the gold mining companies, the actual producers. And then let's talk Ronald Reagan in terms of trickle down. It's true. You get a sector in filled with cash and storing up their balance sheets and finally out of the woods in terms of like just survival mode. They're going to start going shopping for what is like their de facto um, internal, yet it's external uh, exploration arm. They're going to go shopping for the juniors. They're going to start probably a lot of the development stage companies. are going to be looked at. A couple that come to mind: Silver Storm, I-80. These companies that have these big and or advanced assets that are not in production right now could be scooped up for, call it 100% premium to their market today, still be considered very reasonable and or cheap in my view. And that could be gobbled up by the Kinrosses, the IM Golds, the Barracks, the Anglo, the Newmonts. Those companies are going. We're going to see a more robust environment for that happening out of the blue for some of the stocks that we hold and some of the stocks in the sector. We have not seen. This is a dichotomy and paradox that I find very bullish for us, where we have not seen the money flows in the junior side of the lowest cap part of the mining sector, and that creates opportunity. You don't want to, and if you're going to wait for like an outside signal where things, there's money flows that come in and you're saying, fine, they're finally coming, and you start to get a bump. I mean, even a 50% bump, say on some of the small stuff that we own, you get a 50% bump or a 30% bump, but you can see across the sector that now we're getting validated by outside capital flows. I think we're seeing that already to a degree in a lot of various names, but certainly not broadly. Then just make sure you have your money in your pocket, your checkbook ready um, to deploy. Or for me personally, I'm investing in 3 private placements between this week and next week that are closing. One of them is a very cheap gold ounce in the ground scenario that I may or may not share here. That one is going to be covered in premium, and that's a 3 to 5 to 10x scenario with, I think, very low downside because of how much gold that they have and the cheap valuation, and I'm getting a full warrant with that. Then there is a special situation actually in silica, which is unique, but this particular situation and the valuation and the warrants, I can't resist. So I'm going to be putting some money into that. And then last but not least, there's actually a vanadium entity that is outside of Phenom, even though obviously for those of you that don't know, my biggest bet ever in my life and career is Phenom Resources, PHNM or PHNMF in the US. Um, and my cost average, guys, on we just let 1 million warrants roll off and expire after 3 years. Not a lot of companies do that. It's really, I think, amazing that they did, and it's very disciplined because then there was a 55-cent warrant 3 years ago that it was actually Rob McEwen and I that led the round at 40 cents Canadian. Had 1 million warrants there. I can't believe 3 years have gone by already. But I said, look, I'm not just saying this as long as it doesn't affect me. Have the discipline to let those roll off. Otherwise, you're going to see supply come into the market at 70, 75 cents and 80 cents. And, it's just going to be a lot of people that are going to take that arbitrage to put it in and buy it in their cheaper warrants. And I said, that's the problem with a lot of these structures with junior miners. They have a cap on them because they have so many outstanding options and warrants at a certain range above their share price. A lot of them are much higher, like a double or a triple above, but that doesn't matter. I'm not in a lot of these juniors for a double or a triple at this point. If we've suffered through the 3.5 year bear market, continue to plant seeds and buy, I'm in these. Some of these are going to go up 5, 10, 20, 50 times is what I want to keep an open mind for. And I'm not interested in overloading those that have got this ceiling of warrants and options ahead of us. So that's one of the things that helps me with the determinant factor. But what I'm saying is that I'm actively still deploying capital, fresh capital, um, into private placements and open market buys. We saw, like, for example, and just as an update really quickly, I did the Hercules trade recommendation, which started to work out quick, and then now it's faded off and it's down about 10 cents to 76 is where it closed today. And even though this broke down from the pattern that I wanted to see, let me just pull this up really quickly. Yeah, it's not a good thing when you have this this triangle and flag that it's going to break out one way or the other. So this thing could melt down. However, there is a very large gap that needs to be closed around $1.30 something. And that's the premise for a lot of my trade. And frankly, with the way that silver's acting and with the way that this chart looks, we could just be in a, I'm sorry, I don't have it up right now. We're in a range. And if it shakes down to 70, um, I will be adding a ton of stock here. And I'm just going to wait for that range to break instead of the triangle pattern that was the technical pattern in which I had recommended it. And I admittedly did it a little bit early, but that's also partially because we have a lot of people that read this letter. And I'm actually taking on a little bit of additional risk. And I did it myself, and I'll continue to do it, so that we can allow for those of you that want to take advantage of these opportunities. There's some time, instead of it just exploding and going and people start chasing these things. If you want to buy a silver name that still does have intact, to me, and has the ability to go up about 75 or 80% from here on a breakout that's not that much higher than this market. It's got to go over a buck and a couple pennies. Um, you could wait for that to happen and then still scalp it to like a $1.30, because it'll happen fast when that occurs. But these are the type of opportunities where I just wanted to note that, because the silver miners are going to have an immense run in this next bull cycle. Silver outpaces gold percentage wise, upside, downside. Silver mining stocks tend to do the same, and there's much less of them. And silver, it's astonishing because silver, a bunch of us are happy that it went over $30 an ounce, right? Silver was $50 an ounce in 1980, for goodness sake. 44 years ago, silver was 75%, 80% higher than it is today. And so, just inflation adjusted, silver is going to explode in this bull cycle. 50 is not a problem for me. It's just a question of, does it go to 150? Does it go to 78? That's what we're looking at. And that's what I would visualize. And I would also think about not getting into the noise of like these smaller movements. Just make sure you have some positions on that are strong. I did want to also, I'm not going to get into too many little company updates on this one. I wanted to highlight the fact that I think that Bitcoin is getting very close. I think within a couple of months, but it could be within a couple of days. It's going to break new highs, and I don't want, my people to be chasing it at 120. If you don't own any Bitcoin, it's just foolish at this stage. I went to a conference, Consensus, in Austin last week, a crypto conference. I stay very plugged into this area because even though I've had really good luck over years of having huge winners in the juniors, what a lot of people don't understand, I just want you to keep this in mind, not just for me, if you're going to follow my picks or become a premium member, whatever. I don't care. I don't need it. I would love for more people to come on now while we can make a ton of money. Like, if you're join premium, you're going to get more ideas, more coverage, and you're going to make more money. And it's just peanuts what is charged here. As long as you're getting in to a market that's not white hot already, that's where it gets dangerous, no matter what you're doing or whatever. But I forgot exactly where I was going there, except for to say, yes, it's important to note, like, when you're investing in junior mining companies, which is one of the worst businesses in the world, along with the movie business, in my opinion, you're going to have a decent percentage of them that turn into duds, because it's venture, early stage, speculative, volatile. A lot of these companies are undercapitalized, very cyclical. It just happens. And it doesn't matter. I'm thinking thinking about some of the plays, even when this newsletter started, where I had, the one that put a little bit, me on the map in Canada in 2012 to 13 was Zenyatta Ventures, and that one went from August, I still remember it, in 12 from 18 to 20 cents, where I made it my top pick. 11 months later, it hit five. So, when you have something that goes up 25, 27, 28, 29x, it forgives a lot of sins and mistakes. We had Encore Energy. I was early on that in uranium. But there are a lot of premium members, I can tell you, that have been around with me since late 2016 that got into that. We did a placement at 6 cents, recommended it at five. It went to 20, thought I was a genius, went all the way back down to 5 cents over the next, year and a half to almost 2 years. We stuck with it, continued to buy it. And, today I think it closed over $6. That had a 3-for-1 split. But I mean, when you're talking 5 cents to $2, guess what? That's a lot of money and it's a lot of return. And we had half warrants in that deal. Abra Silver, which also just did a 3-for-1. It's trading at $2.50 Canadian. We saved that company in 2019, I believe, because I just had 5-year warrants expire that I exercised at 10 cents just in March. And that was a 5-cent placement. That stock is 250 now, which is the equivalent of, call it 70, 80 cents or whatever, which it had been to pretty quickly after we did the raise, and it was free trading. When you start to these things add up. So with the warrant, where you have a stock go from 5 to 80 cents, okay, so 16x, and then the warrant on top of that with the 10 cent piece, another 15x. So 30x your money. I mean, you're talking about 10 grand into 300, a million into 30 million. It's you can afford to have some of these picks that don't work out. So I would encourage you guys, though, do your own homework, do your own research. I share to the best of my ability. I definitely put a priority on taking care of, especially if it comes to any deal flow. My elite members get the first look there, and we've been doing a number of just dirt cheap deals with long-term warrants over the past 12 months, at least maybe 18. We're just planting those seeds. Those are going to pay off. One or two of them may just disappoint us. Doesn't matter. The ones that work are going to make us wealthy. And then we have the premium members, which have sometimes access to deal flow, and then other times a lot of this stuff is open market. But a lot more updates and a lot more names to consider. And if you're going into a bull cycle, you just want to, whoever it is, if you don't have time, or if you are a pro and want somebody who can actually vet deals that they're going to be in, you're going to have some of the big winners. Paying for that service is not a bad idea at all. I think right now with the timing of it all, just make sure you're getting some money deployed is the point. You don't need to take my advice on picks if you're a smart person, or if you have time on your hands and you're doing a lot of due diligence. But if you are a really smart person, you would be, hiring, call it, people like myself to bring different ideas in the earlier parts of a bull market so you can leverage your capital. So anyway, today, a Bitcoin, TikTok, all right, gold, TikTok, gold miners, silver miners, even the commodity juniors. I remain very bullish. We've waited. We're down some of these plays. Phenom, I think I was going to say, after we let those roll off, those warrants, it's at like 45 cents Canadian right now. My cost average is barely 40 cents. So I'm not in this for a 20, 50, 100% return. I'm in this neck deep, eyeball deep. I've got with that million that rolled off, where I had 10.6 million shares in warrants. So now call it 9.7, because I've been back in the market buying as of last week, when it dipped into the low 40s. And there are incredibly exciting things that I think I've been percolating for Phenom for a long time. This is not an overnight flash in the pan. The first time that we got involved in Phenom, it's called First Vanadium, funded them at 14 cents with a 24-cent warrant. in November of 17. So we're going on 6.5 years, over 6.5 years since I first bought this stock, and many of us started to invest in it. It went to $2 within 7 months, and that was very nice. But then a lot of challenges with the vanadium bear market. Now, look at how robust this gold portfolio is in Nevada. There's drilling going on this summer. Crescent Valley has their permit. Dobbin, I can tell you they're just very excited about this project. We have the Carlin Deep still to go back to once we have it's more of a capital friendly environment to drill those very deep holes. Just acquired King Solomon. These are all elephant hunting type of plays. Plus, there's a copper asset in Arizona the company's been sitting on for a long time. So that entity, the plan is to spin that out into Phenom Gold or whatever it's going to be named. And then Phenom Vanadium, which I'm really excited for you guys to get some updates in the coming weeks, because I think folks, even with a dead vanadium market, we have had a little uptick recently, but I don't know if to take it seriously or not yet. Vanadium is enthralling to me. It is going to be a big component of what I saw in Texas, which is this race with AI and data, and the need for energy is there is not enough supply, and it is going to be a race to lock up energy units. And vanadium, industrial scale, solid state and or redox flow batteries are going to play a role in this. And the compound annual growth rate that we're starting to see and will last for likely the next decade, there's no way that the price is going to stay down at $5 a pound. The Chinese and the Russians control it. It's a big problem. We have the largest, highest grade vanadium asset at surface in North America. And I think within a couple of months or less, it will be evident that this is the sexiest, most compelling vanadium vehicle for anybody who wants exposure to vanadium as an investor. It will be the sexiest, most compelling vanadium story when it's spun out to a pure play. I mean, it is now, but when it's especially spun out into Phenom Vanadium in the world, it is better than Largo. It's better than Bushveld. It doesn't matter. A straight producer will have nothing on the legs and components and foundations in which Phenom has established dominance. It's amazing. It's amazing. If you really, really do your homework, you can start to get a feel for some of the things that they've been moving towards in addition to the Carlin asset. I'm going to cut it off there because it's a long video, and I hope you guys have a good night. Maybe I will try to send this out tonight, or certainly in the morning. I appreciate you listening, and I'm going to add some of the Real Vision interviews for those of you that want to dive into more content. Those I've gotten very good feedback on these, and I haven't really shared many of them, so I'm going to do that this morning if this goes out in the morning or tonight. Thanks.